Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on Dalal Street. I'm Suyash Maheshwari and with me is Amit Ranjan. And it's a Thursday morning and the markets, they have opened marginally lower. Nifty has started the day above the 21,900 levels, and after yesterday's sharp correction, which by the way was the worst day for the markets in the February series, there is clearly caution in the system, and today could specially turn out to be a volatile day since it's the monthly FNO expiry for Nifty. But there is clearly lack of confidence at higher levels, and Amit, if you look at the global markets, they are also not supportive as they were through the start of the year.
Good morning, Suyash. It's red everywhere and all eyes are on today's personal consumption expenditure price index, which is the preferred index for Fed when it considers rate cuts. If I look at Dow Jones, it closed in the negative at 0.06%. S&P 500 closed in the negative at 0.17%. Nasdaq closed in the positive at 0.55%. I would like to mention here, which I'll come to later on, why the Disney stock on Wall Street was up 1.26%. Coming to the European markets, the stock 600 was in the negative at 0.35%. Hang Seng has been choppy this morning. Sometime back, it was slightly in the negative at 0.05%. Nikkei again today is in the red today after being in the green for quite some time. It is in the negative at 0.42% right now.
All right, and the markets, they have started on a on a negative note, but recovery was there, slight recovery was there in the morning trade itself, but pretty much we are trading on a flattish zone, and as I was talking, there is clearly signs of caution in the system at higher levels. 22,100 to 200 zone, that has been a critical reversal zone for the index in the past many sessions, and yesterday, specifically, we saw a big crash of about 250 points from the day's high for the markets, and even this morning there is a bit of a choppiness, and of course today is the weekly monthly FNO expiry for Nifty contract, so volatility will be high, and you can also see on your screen it's up about the India VIX, the volatility gauge is up 1.4% as of 9:30 am this morning. It's back above 16 levels. And Nifty is, Nifty at 21,960. Amit, I think that is very critical. The markets need to hold in and around those levels, because 21,960 is where the 20-day moving average is, and that has been a critical support for the index in the last 2-3 weeks. And in fact, we had been trading higher yesterday also. In the sharp crash that we saw, the index did break below the 21,000, the 20 DMA, which was around that 21,950 mark. But it did manage to close, above it. We just closed marginally above it, and that is critical for us to track, because if the index does not respect the 20 DMA, a sharp sell-off could be in the offing. We'll of course get direction and cues with our guest who will join us in a short while. But also let's look at the broader markets, because there is again clear froth in the system that is building up, and SEBI yesterday, SEBI and AMFI, in fact, the mutual fund regulator, they have put out a notification asking fund managers to limit the inflows in the mid cap and the small cap space. So us, not only us as market participants are cautious about this rally or this this bubble that is kind of, I'm not gonna go out and say it's a bubble, because clearly the earnings have improved, but the rally, Amit, in the broader markets, that has been rather tremendous. But there are certainly cracks appearing over there, especially in the mid cap space. The index has turned negative for the month of February. It's in fact this is the first negative month for the mid cap index since October of 2023, so first in 3 months, and the small cap index, that is about 5% away from its record high. So clearly there are signs of caution. Let's also look at some of the sectors, because yesterday one of the reasons why the market crashed as it did was because of Nifty Bank. Of course, yesterday was the expiry for the Nifty Bank, and perhaps that also came into play. But Nifty Bank was one particular segment of the market that we all had been banking on to take the markets higher from here on. And even if you look at from the very recent low of about 44,600 sort of levels, the index altogether had gained about 3,000 points till the the recent peak. But from there on, we have given up about 1,400 points, so about half of what was gained, and in fact we have broken below the 46,000 mark. We broke down below it yesterday, and in fact even this morning as we speak the index is trading with a slight cut of about 0.2%. And the IT pack also, Amit, I wanted to briefly touch on it, because that was the only segment of the market which was trading in the positive, despite it was kind of trying to manage hold the ship together. But by the end of the session the index also succumbed to profit taking and ended lower, although marginally. Even this morning we are seeing a bit of a pain building up over there. It's down about 0.3%. The auto pack, it was one of the worst hit sectors yesterday. The index crashed by 2%. Is perhaps the investors over there are trying to enter some of these stocks which had seen tremendous rally, especially in the two-wheeler segment. We had spoken extensively about the likes of Hero MotoCorp and Bajaj Auto, and how they have kind of unlocked value on this premium theme that is emerging in the two-wheeler space. And perhaps these corrections, it was not a mild correction, it was a sharp correction, would give investors opportunity to make some bit of entry in these high flying momentum driven sectors like your auto pack. FMCG, I mean, what can we talk about FMCG? It has been like feeling the heat since the last many months. Rural demand, Amit, I think that has been clearly lagging for the FMCG pack, and that has been a pain point. But I'm made to believe
it's been off the radar of the FPIs also,
of course,
in recent times.
And I guess Akshay Bhagwat has is through now. Akshay, thank you for joining us here on News9. What are you making of the markets at this point in time? Because yesterday, of course, one of the worst monthly falls, in fact the worst monthly fall in the February series, and the index did manage to hold above the 20 DMA. It has been a crucial support for us, but as of this morning we have broken below it. Do you think a sharp sell-off could be in the offing here? What's your opinion here?
Yeah, good morning, Suyash. Yes, so if you look at the broader market setup, the Nifty is making a new all-time high, but somewhere it is not able to sustain or it is showing signs of fatigue once it crosses the 22K mark. Yesterday, there was a range consolidation breakdown ahead of the expiry, surprisingly. So the expiry move, which normally happens on Thursday, happened on Wednesday. That's the sense I derive. 21,100 is the resistance which is working out, and we are dealing with one of the most important support points, which is 21,850. So as we head into the March series, the rollovers are around 68%. The way the rolls are happening in the last couple of days, my sense is some short positions are slowly building up into the system. I would give levels some importance here. If the Nifty sustains below 21,850, that's the first sign that March series might head into a correction mode. So keep a watch out on those levels. As for today's expiry, the levels would be 21,850 to 21,100. My sense is it is going to be a muted expiry today. 21,950 might hold on, and the market may spend a majority part of the day oscillating plus minus 50 odd points from the 21,950 odd levels.
All right, and what's the view on the banking pack? Because Akshay, we have spoken about it extensively. Whenever there is some bit of a bull run that starts to build in the banking space, it just gives it all up. We had rallied by about 2,800 points since making that recent low of about 44,600 sort of levels, have given up about half of it. Where do we go from here?
For the bank index, the development is negative for short-term trading. Clearly, the bearish candlestick pattern, which we noted yesterday, was a breakdown of the support zone. If you recollect last week, you had a strong breakout in Bank Nifty, and this entire positive momentum was broken yesterday once Bank Nifty broke the level of 46,400. So a negative setup. Bank Nifty should crawl up all the way back again, cross yesterday's high, then only probably, you have some kind of a hope of recovery or rebound in momentum as it currently reads. Yes, it's the expiry day, so 46,000 where significant open interest positioning is seen for today's weekly expiry in put writing can be the savior for the day, but this seems to be short-lived. It is a support or a hold on to the support phenomena just for day trading, but for the broader setup, the initial sense which I derive is 45,000 might be on for the March series. Today's expiry, yes, it's going to be muted, 46,000 plus minus 200 points. That's the sense which I derive. Broadly, my reading is 46,000 might hold on, and Bank Nifty might surprise you holding ground for today's weekly expiry.
Good morning, Akshay, and I'll drive your attention to the mega merger between Reliance and Disney in India. It's of the worth of $8.5 billion, 70,352 crores, and of which Reliance will be injecting 11,500 crores, or almost 1.4 billion into the venture as part of the growth strategy. Now, when I look at the Reliance stock today, after being choppy in the last few days, it is up this morning 1.12%. Disney stock on Wall Street closed very much in the positive yesterday at 1.26% up. Where do you see the Reliance stock going from here?
If I just look at the price action on the Reliance, the last few trading sessions, Reliance has held its ground, but somewhere the trading volumes and the price action has been rather muted. It's been confined in a broader consolidation zone. As I understand, the support somewhere is working around 2,900 and 3,000 is working out to be a resistance. The chart setup is positive, trading above all the short-term moving averages, but somewhere the momentum is lacking. So I still maintain a positive view on Reliance. There is nothing to worry about, just that the stock is lacking some momentum on the back of today's news. Also, the reaction has not been that strong as we anticipated. So yes, if you hold Reliance, continue to hold it. I believe even if there are some minor jerks along with the market move, broadly, this is the stock you need to be holding or buying on any dip in case it offers around 2,900. Broadly, I see 3,000 being broken out soon on the upside, and possibly 3,100 plus are the targets which I foresee in Reliance.
All right, 2,900 is where you could add positions in Reliance. A possible breakout above 3,000 is what Akshay is calling. 3,100 is the target he's placing on Reliance Industries. That is a view coming in from our expert, Mr. Akshay Bhagwat. Sir, always a pleasure speaking with you. Thank you for joining us here on News9.
Thank you.
But with that, let's take a short break. On the other side, we'll be joined by Mr. Sudeep Bandopadhyay.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more, streaming on News9, plus subscribe and get free vouchers.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Tick here on News9, and the markets, they have in fact turned a corner. The markets are positive now. In Nifty, as we speak, is up 0.3% and is back above 22,000 mark. Sensex is also up 0.2%. It's nearing 72,500 sort of levels. The mid cap and the small cap space, the broader markets in general, they continue to reel under pressure, but they have also, recovered from the day's low. Nifty mid cap is down about 0.2%. The small cap index is down about 0.35%. Volatility has come down. India VIX, as we speak, is back below 16 levels. It's just around that 16 level at 15.98 as of 10 a.m. this morning. But some bit of a recovery is there. But I mean, after yesterday's correction, one would imagine if it's a dead cat sort of a bounce, if the bounce back does have any legs to it. But I guess we have Mr. Sudeep Bandyopadhyay to answer that. Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital, joins us. Thank you, sir, for joining us here on News9. What are you making of the markets today and yesterday, sir? I mean, a sharp correction yesterday. Do you think it was just a one-day sort of a shakeout, considering that we are around that F&O expiry time and maybe the traders are repositioning themselves, or is there more to it?
I think all of that and more. I think, Yash, we have to remember that we are at near all-time highs, and market has moved up quite a bit over the last few months. And at such high levels, a bit of consolidation is par for the course. Of course, yesterday's, the SEBI communication regarding mid cap and small cap to the fund managers and to the AMC industry in general was the cause of a bit of a concern, naturally, because the way mid cap and small cap has moved up, and regulator who has much more access to information than we all possess, sounding a warning bell definitely is a cause for taking stock of the situation. And mid cap and small cap corrected drastically. Of course, we have this F&O expiry, as well as the rotation of positions amongst the fund managers. So all that put together, I think we did see quite a sharp correction. There were no positive triggers as such yesterday, and that led to this correction.
All right, and as you rightly pointed out, sir, the broader markets, I mean, they are cracking. Both mid cap and the small cap indices, they have turned negative for the month of February. And of course, there was a red flag raised by SEBI and AMFI. They have asked fund managers to limit the flows in mid and small cap space. I mean, what are you making of this correction in the broader markets in general? And do you think that this much celebrated rally that we were all talking about, we were all gung-ho on in the last 12-15 months, is that nearing its end?
I don't think the rally is nearing its end. As I said, after the market running so much, bit of consolidation, profit booking, I think is par for the course. So I don't think we should get too perturbed. And the regulators, the communication is most probably very appropriate considering the kind of froth we have seen in some of these small cap and mid cap. I'm not, even suggesting that all of them are bad or, they all are at unrealistic valuations. But there are pockets where the valuations did look full and sometimes a little more than full. So bit of correction, bit of profit booking, bit of stock taking is essential amongst the fund managers and the industry as such. If retail also gets the message and takes necessary corrective steps, that's also good. So overall, I don't think fundamentally anything has changed in the market, whether it's the macros or the micros. The India macro looks definitely good. Corporate results Q3 were by and large okay. Global scenario is also not bad or anything to get unduly perturbed about. So under the circumstances, I don't see the rally ending or any such thing happening. Yes, at all-time high levels or near all-time high levels, volatility is bound to happen. And pretty much that's what we are seeing.
Of course, clearly there is some caution in the system. And, we were talking about FII flows, and I mean, they have been rather undecided on what their stance is, of course, on the Indian markets in the last 6 months. But in the last 3 months, I'll come to Amit first. FIIs have pulled out nearly 4,000 crore worth of equities. Where is this money going, Amit?
Financial services, while they were gung-ho about this sector, FPIs, in the year 2023, they put in 52,900 crores through 2023. In the month of January itself, the financial services sector saw an outflow of 30,013 crores. And in the first 15 days of February, they've 7,536 crores more have gone out of this sector. Construction has seen a net outflow in the last 1.5 months after seeing some inflow in 2023. Telecommunications net outflow in the first 15 days of February 2024, but there was a big inflow in 2023 and in January 2024. The sector that has been a darling of the FPIs in the last 1.5 months is IT and healthcare. Net inflow of almost 4,000 crores have come into healthcare. IT almost 7,000 crores in the last 1.5 months. Consumer services almost 4,000 crores in the last 1.5 months. Services and auto components have been choppy. There was a net outflow last month. There's been a big inflow this month. But 2023, 29,389 crores were put in by FPIs into automobiles and components sector. Now, Mr. Bandyopadhyay, do you see the financial services sector coming back into the radar of the FPIs anytime soon? And what is worrying them about the Indian financial services sector, according to you?
Two things before I answer your question. I think you put it very nicely sector-wise, but there are a couple of other factors which I want to highlight. One is the Chinese valuation of Chinese equities have level where I think most short-term funds at least are looking at an arbitrage opportunity or an opportunity in the short term. So a lot of these tactical funds are moving to China. Structural and long-term funds obviously are betting on India and they continue to bet on India. But some of these short-term guys are looking at China definitely. So that we have to keep in mind. Second thing, if you look at the data of FII inflows into India, you will find a strong inflow into Indian debt, because I think that is where a lot of action is. And Indian debt is getting included in multiple indexes, and it is of course attractive even after all adjustments. So that is what is happening. Now coming back to the financial services, I think there are some concerns as to whether the financial services returns or financial services performance has already peaked. And from here on, we will see things gradually moving in a direction which is either stable or the credit costs start going up. So I think that is one concern which is there amongst the investors, and that's what they're looking at. Now, having said that, I believe that particularly the PSU banks That is one space where there is a lot of opportunity still sitting, whether it's in State Bank of India, Bank of Baroda, Punjab National Bank, Canada Bank. I think these are banks which are transformed in a way. And I'm not comparing them with an ICICI Bank in terms of, the transformation, but they are definitely transformed from what they were. And I think they deserve better valuation. They have already moved up, but I think there is much more scope for increase from current levels as well.
Mr. Bandyopadhyay, two sectors which have been on the radar even of the impetus that PLI has given to these sectors. One is pharma and one is IT. Do you see FPIs being positive on these two sectors on a continued basis through this year? They have been in recent times.
I think they will. One has to remember that IT sector to a great extent depends on what's happening in US economy. And the way it looks, US economy is strong and they are posting growths much better than expectations. There are a bit concerns about whether on ground these are actually translating into orders or not. But the reality is it's a matter of time before the order flow also picks up. So as far as Indian IT companies, on an average 50% plus of their income comes from US, should do well. And I think FPIs know that pretty well, and they will continue to invest. They have started seeing a lot of brokerage reports, foreign brokerage reports coming, advising buy into large cap IT stocks. And that sets the trend. As far as pharma is concerned, I think it's a mixed bag. While we try to paint it in one brush, there are multiple pockets and multiple segments in pharma. What we understand is that some of the pockets are going to do extremely well. And that is where one needs to look at. Also, I must mention that US generic pricing pressure hasn't yet disappeared. So, companies totally dependent on US markets or fighting in the US generic space will continue to struggle. They may post good results in one quarter, but you can't be sure about their next quarter results. Companies focused on Indian markets and other geographies will tend to do better.
All right, and sir, before we let you go, you made a point that the money, FPIs, even while they are not investing in equities, they are certainly lapping up government debt. In fact, if you look at it, they have bought debt worth about $4.5 billion in just the first 2 months. I think it's the highest inflow in the last 6 years, or if you look at it on a monthly basis. What does it all mean for the rupee, sir?
And this is exactly what I was trying to point out, Suyash, that while we are being an equity market participants are lamenting the fact that they are not putting money in equities, they are putting money into India, and that is definitely helping stabilize rupee. As things stand today, it has not shown major appreciation. And my guess is that it won't appreciate also too much. But stable rupee is what the RBI wants. RBI definitely doesn't want to see rupee appreciate too much or depreciate too much in a hurry. So I think it is working to RBI's plan and RBI's wish. And I think rupee will continue this trajectory only, being in this particular range where they are hovering around the 83 to the dollar mark.
All right, and one final question from me. The Reliance Disney deal has finally been announced. What sort of impact do you see on the stock price of Reliance? Because the stock is, of course, very close to its all-time high, but has been struggling around that 3,000 mark, sir.
Well, I think I've been, recommending Reliance to my investors for the last 1.5 years. I think even before this deal, there were 3-4 businesses with great potential sitting inside Reliance, whether it's the retail business, whether it's a telecom business, green energy business, and of course the traditional oil to gas segment. Now with this, they are becoming an entertainment behemoth, and that is again a huge segment. Today Reliance market capitalization is less than what the market capitalization of Netflix is. Now that gives you an idea. Now Netflix is in only one segment, which is this OTT business, which is, I think is a very small part of Reliance's business. They have the potential to become big there. But look at the fact that Reliance is in multiple other businesses where they can be comparable at, retail with Walmart, at telecom with the biggest telecom players in the world, at oil and gas with the largest oil and gas players in the world. So I think it is a huge value unlocking story. So as far as I'm concerned, from a long-term investors portfolio perspective, Reliance is a must-have in their portfolio.
All right, words of wisdom coming from Mr. Sudeep Bandyopadhyay. Sir, appreciate your time, appreciate your thoughts. Thank you for joining us here on News9. But before we wrap things up, let's just do a quick check on the markets, because they have in fact fallen below 22,000, in fact fallen below 21,900. We were talking about, Amit, a dead cat sort of a bounce, and I mean that seems to be certainly the case today and this morning. Currently we are very close to the day's low. The day's low sits at around 21,860 levels. We are just about 27 points above it. Nifty is down 0.3%. Sensex is down marginally as well, about 0.1%. The mid cap and the small cap space, although they were trying to make some bit of a recovery in the morning trade itself, they are back. They were in the red throughout the session. They were making recovery and moving towards that flat line, but both are down. Both indices, the small cap and the mid cap indices, are down 0.5% and close to their respective day's low. India VIX, the volatility gauge, is back above 16 levels. In fact, it's moving towards its day's intraday high and currently at around 16.29 level, and that is as of 10:10 a.m. this morning. But with that, it's a wrap on this edition of First Stick, but stay tuned with us as we'll be right back with Business Plus.
जैसे है ना, वैसे ही एक मूवमेंट चलना चाहिए, मेड इन इंडिया.
Nowadays you're seeing there is a color palette